Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions, and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
While most Japanese cities are shrinking, one city just posted the fastest population growth in the entire country. Fukuoka grew 3.2% in 5 years, the highest rate among all 21 major Japanese cities in the 2025 census. Here's why that matters if you're looking at real estate. Japan's population has been shrinking nationally for over a decade. Most cities, even major ones, are losing residents. Against that backdrop, a city actually gaining people fast is the exception, not the rule. Fukuoka isn't a one-time fluke either. It's grown in every national census since the very first one was conducted in 1920, a streak no other major Japanese city can claim. In the 2025 census, Fukuoka's 5-year growth rate of 3.2% ranked first among Japan's 21 largest cities, ahead of Tokyo's special wards at 2.3%, Chiba at 2.1%, Osaka at 2%, and Saitama at 1.6%. In raw numbers, Fukuoka added about 51,500 people in 5 years, the third largest increase of any Japanese city, behind only Tokyo's special wards and Osaka, both far bigger cities to begin with. The driver is what demographers call social increase, young people moving in for university and jobs, not births outnumbering deaths. It's migration, not a baby boom. Part of the pull is practical, lower housing costs than Tokyo or Osaka, a compact city where commutes are short, and a growing job market that doesn't require leaving Kyushu to find opportunity. Within the city, growth is concentrated downtown. Higashi Ward grew 5.34%, Chuo Ward 5.29%, and Hakata Ward 4.84% over 5 years, all central, walkable districts. City projections expect Fukuoka to keep growing until around 2040, peaking near 1,700,000 residents, even as Japan's national population continues to decline. So why do people keep moving here? Fukuoka is designated a National Strategic Special Zone for startups, with relaxed regulations on employment, visas, and corporate tax. It was also the first city in Japan to offer a dedicated startup visa for foreign entrepreneurs. It's working. Fukuoka has Japan's highest startup founding rate, 7.3 new companies per 1,000 existing businesses, ahead of Tokyo and Osaka. The airport sits just 2.5 kilometers from downtown, with flights to 22 international cities and about 832 flights a week, making it one of the most accessible major cities in Japan, and a short hop from Korea and China. Downtown is being rebuilt in real time. The Tenjin Big Bang redevelopment project has seen 74 of 93 planned buildings completed as of early 2025, with height limits relaxed to 115 meters to allow taller towers. A second project, Hakata Connected, is expanding transit infrastructure and office space around Hakata Station, the city's main transport hub. A new regional bank headquarters there is scheduled to complete in 2026. And unlike Tokyo or Osaka, the cost of living here remains notably lower, which is part of why startups, students, and remote workers keep choosing Fukuoka over bigger, more expensive cities. Events like Kaliv Fukuoka and Ramen Tech have also started drawing international founders and digital nomads. People come for the food and the low cost, and increasingly stay because a genuine startup community has formed around them. It's not just startups either. Line Fukuoka, a major engineering hub for the Line app, employs a large tech workforce here, and has partnered with the city on a Line Smart City initiative using AI and fintech to modernize local services. Population growth drives housing demand. So what does that mean for real estate prices and rental yield right now? All figures here use the same data source as our 5-city comparison video, Kenbiya's quarterly market report, so the numbers are directly comparable across cities, not cherry-picked. Based on 2026 market data, the average price for a compact investment condo in Chuo Ward, Fukuoka city center, is around 15,080,000 yen, about $93,375 US. Compare that to a similar unit in central Tokyo, around 36,870,000 yen, about $228,297. Fukuoka's entry price is less than half. And the yield is higher too. Fukuoka's surface rental yield sits around 6.66%, compared to 5.22% in Tokyo. That yield implies a monthly rent of roughly 83,694 yen, about $518, on this property. This isn't a thin, illiquid market either. Chuo Ward recorded 1,395 condo transactions in 2024 alone, real trading volume, not just listings. Prices have also been climbing steadily. Over the past 3 years, average condo prices in Chuo Ward rose about 40%, tracking the population growth and downtown redevelopment happening at the same time. That price growth has a side effect, yield compression. The surface yield has fallen about 0.9 percentage points over the same period, a normal sign of a market getting less undervalued as more buyers notice it. Financing works the same way it does anywhere in Japan. Non-permanent residents can typically get variable rate mortgages around 0.8 to 1.4%, while permanent residents and citizens can access flat 35 fixed-rate loans. With young people continuing to move in for university and startup jobs, rental demand downtown looks structurally supported, not just a temporary spike. For an investor, sustained in-migration into a compact downtown core is usually good news for occupancy, more renters chasing a limited supply of central units. As with anywhere in Japan, there's no restriction on foreign ownership here either. The same national mortgage and purchase rules that apply in Tokyo apply in Fukuoka. The honest caveat, Fukuoka is still a smaller, more regional market than Tokyo. Liquidity and buyer pools are thinner, and it doesn't carry Tokyo's global, capital preservation reputation. It's also a more regionally concentrated economy than Tokyo's. A downturn in Kyushu's job market or a slowdown in the startup scene would hit Fukuoka harder than it would hit a more diversified capital like Tokyo. Much of the growth story depends on the startup and redevelopment momentum continuing. If either slows, so could the population and price trends behind it. There's also a timing risk. The yield compression we just saw means the undervalued window may not stay wide open forever. Prices could keep converging toward Tokyo-like levels as more investors discover the story. This fits investors comfortable with a smaller, higher growth regional market in exchange for a lower entry price and higher yield, not those who want Tokyo's liquidity and global brand recognition. The lower entry price also matters practically. It's a smaller check size for investors getting started, and an easier property to finance without needing Tokyo-level capital. In our earlier video comparing 5 Japanese cities, Fukuoka already ranked third for rental yield, behind only Sapporo and Nagoya. Combine that yield with the fastest population growth in the country, and the investment case gets stronger, not weaker. To recap, 3.2% population growth, the fastest of any major Japanese city, an entry price near $93,375, less than half of Tokyo, and a 6.66% yield, well above Tokyo's 5.22%. The case for Fukuoka isn't safety, it's growth at a discount, a city gaining population faster than anywhere else in Japan, with entry prices under half of Tokyo's and yields well above it. That's the real data behind Japan's fastest growing city. Subscribe for more data-driven breakdowns of Japan's real estate market.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.